What's up, everybody? It is January 11th, 2021. I know this is weird, but we got Smart Money Monday. So today we're going to do this format a bit differently, in which it's going to be more of a conversation dynamic versus me just preaching to the crowd. So for those of y'all on YouTube, drop your questions in the comment section, and I guarantee I'm always on YouTube. So I'll catch them and I'll answer them as soon as I can. Be sure to like and subscribe for Outcome Reach Podcast, etc. We're here for y'all. We're gonna help y'all get the education, meet us halfway, and we're gonna get you straight. But without all the preaching, this is Smart Money Monday. We're gonna get into some charts, and I'm gonna dive into a little bit of psychology. So first of all, looking at this chart, Mo, what do you see when you look at this?
The previous impulse broke structure to the upside, so I'm probably looking for buys overall.
Actually, no. This is actually a mistake that people make a lot. Now, whenever you look at this, now this is just market structure before you look for your exact entries. We can see that we're in a clear uptrend, right? But you got to remember, you got to zoom out and you got to look at the bigger picture. When you look at this right here, what is this called in retail terms? Or really, it's just a zone. What is this called?
Triple top.
Triple top, exactly.
And liquidity took that hoe.
Yes and no. Remember this. There are two types of retailers what they're doing right now. We agree that this is triple tops. Now, some retailers, they had a sell limit right here with the stop loss up here, right? Other retailers had a buy stop up here with their stop loss down here. When I see these triple tops like this, I'm going to go inside the buy stop because the moment this wick through, all the retailers that were originally selling are now FOMOing into buys. So they're all looking for buys. Remember, the key to smart money, the key to this method is we are institutional traders. You got to look what everyone else is doing and do the opposite. So when you look at this and see everyone else is buying, Mo, what are we looking for?
Sells until it hits their stop losses, probably somewhere lower.
There you go. So looking at this, we know this is the zone. Retailers are buying. We're looking for some sales. Now, on the higher time frame, this is something that often goes ignored. Before you place your trade, you need to have, I was talking to another student about this earlier, you need to have your stop loss and your take profit predetermined. Do not enter a trade if you do not know where your take profit is going to be. Now, the only scenario in which that isn't true is if it's doing what Bitcoin is doing. It's broke like an all-time high. Then, of course, you kind of got leeway. But for the most part, in trading cross currencies, you need to know where your take profit is. You need to know where your stop loss is before you go. Where you find your take profit, look at the higher time frame. There are multiple ways to do this, but here's the way I usually do it. Like Mo just said, I am looking for where retailers are stop losses. But more than that, I'm looking for zones of liquidity. Liquidity being support and resistance. So if I'm looking on this time frame, here's the area I'm looking for taking profits. Right here, where all these wicks are. It also lines up once you all get into the more advanced section with an inefficiency right here. So that's where my take profit's going to be, right here. Now, I know you're saying, I don't like shit. Excuse me. Don't like nothing. This is the daily time frame. Let's see. So where we are. Yeah, that's 100 pips. So look what we just did. Think about it. Look what we just did. We've now determined what direction price was bullish. We've determined that price is probably going to go bearish because these buy stops are activated. Now we're going in and trying to ride that trend down. We're just trying to catch the entry. We know where price is going. We're trying to catch the entry. So what you do is you go down to a smaller time frame. You see, okay, what's price doing now on this time frame? How does it compare to what I just looked at? And really, it's even more clear. You see this zone of liquidity being support resistance. All right here. All where retailers have their orders set up. You see, you can drag this box over a little bit so you can see this. This wick slammed right through that liquidity. And we're going to get to why that slam through is important. Right now, I'm going to market structure before I dive into how to find these entries. It slammed through that wick. All these buy stops are activated. So now the retailers are getting stopped out as price goes back down. So middle time frame, just confirm that. Then we go down to a lower time frame to find our entries. I usually go for the 15-minute time frame, but for the sake of this one, I found this really nice entry right here on the hour. And what do we have right here? An entry. Now, Kyla, how you find the entries? Bear with me. Here's how you find your entries. This is what is called the smart money method. There are 3 confluences. Really more than that, but for the basics, we're gonna go with just 3. All right, now we got a lot of people on the call. Who gonna tell me the first confluence?
Engulfed candle.
That's actually the last confluence. What's the first
Liquidity?
one? Liquidity, correct. Now, as we said earlier, liquidity in retail terms is support and resistance. So the first confluence, once again, liquidity. Yes, Tatiana, that's correct. All right. Liquidity being support and resistance. If we come in here, we're looking for our exact entry. We're looking for support and resistance. Now, a little bit, we've seen, this goes back to our previous example. We've seen support or resistance that already got broken. If we go back to the hour time frame, remember this wick that slammed through that gray box? That was an example of liquidity being broken. But we're gonna go to the lower time frame. I want to find another example. We see more liquidity being broken right here. This is not the cleanest example, but it still holds. You see these equal lows right here, and this move right here that's starting to break through it. Not the cleanest example, but it's small. So I'll find y'all a cleaner example in a minute. So that is the second confluence. You want to see that liquidity, that support resistance being broke through what is called the impulse move. Impulse move in retail terms, think fake out, think stop hunt. That's essentially what it is. And that brings you to the last confluence. That is going to be the outcome candle. Now, depending on who you heard about this method from, that can have many different terms. You might hear outcome candle, order block, optimal trade entry, area of interest, etc. They're all multiple sides of a similar coin. They all represent almost the same thing with just really minor differences. But for terminology's sake, we're just going to say outcome candle or OC for short. Now, what does an outcome candle look like? It's an engulfed candle. If you don't know what an engulfed candle is, I mean, just Google it. And all you do, look at this. You see the engulfed candle right here. The engulfed candle, the outcome candle, is going to be before the impulse move. This is a sale, right? So you're going to put your sale limit at the bottom. And you're going to put your stop loss at the top. And that's it. What did we just do? We started the daily time frame. We saw what price was doing, the direction price was going, and where it's probably going to end up going. We went down to the middle time frame to get a clearer picture of that. We went down to the smaller time frame to find an entry to just ride that wave down. So then price comes up, hits it, tanks. That easy. That easy. That easy. All right. Before I find you another example, I want to go ahead and answer some quick questions. So give me some questions right quick.
So how do you know like which support and resistance or like what liquidity really matters? Because obviously there's a lot of different support and resistance depending on what time frame you're looking on. So how do you know to spot key areas in the market?
Good question. So the higher time frame support and resistance is your best bet. And let me actually go to a different chart because this is an example. This is where you really always want to focus on the higher time frame support and resistance. Because right here, we see that we're in a downtrend. If you go into the 5-minute, what's price looking like? An uptrend. Likewise, you might have a clean area of support and resistance on the higher time frame that might not like anything on the lower time frame. Look for the support resistance on the higher time frame. Look for the entry on the lower time frame. Does that make sense?
Yes.
All right. Any more questions before I find y'all another example?
So that would mean that you would wait for price to approach that support and resistance to look for an entry, basically?
Exactly.
and
This
then
is
you wait
what
for
I
the
mean.
reaction.
Exactly. And you actually brought up a good point. If you are not looking for entries around a key support resistance level, you're gambling. You are simply gambling. The biggest thing that you need to do, and this requires patience, you got to wait on the entry. All right. For the most part, I don't trade a whole lot during the week. Those of y'all who are in our signals chat know that. I usually get a decent trade. It's either Monday for whatever reason or Thursday. And that's because I'm always waiting for price to approach that key level in the higher time frame before I go to the lower time frame and find that entry. When doing that, you're not being emotion. I mean, you're not having emotions. You're not wondering if price is truly going to go in that direction. You know exactly where price is going to go, and you're just finding your entries. You're being patient. You know exactly where price is going to go. When price is at level, you enter. That easy. So you are not reacting to a market like the 96% of retail traders are. You are anticipating what the market is going to do. That's going to separate you. All right. Now, let me find y'all another example. And I actually should have found this ahead of time, but I didn't. Let's see. This actually might be a pretty good example right here. I think it's funny. I always just randomly open my charts and see clean examples. Now, Malia, this actually goes to your previous question. Looking at EJ, we can see that we're in an uptrend. How do we know that we're in an uptrend? This is how I look at it. You can use a trend line, whatever. This is how I look at it. Right here. Look at this. That's not a line. Give me my line. Thank you. Look at this line right here. You see triple tops. Really more than triple tops. Above that is going to be liquidity. In an uptrend, you are going to have resistance broken and it's going to turn into support. That's common retail ideology. But we got to factor in the institutional way of doing that too. You see right here, let's pretend this hasn't happened yet. You see right here that you have your resistance. So retailers expecting price to hit this level and shoot back down. What does price do? It blows through it. Now, when price blows through it, retailers are expecting price now to hit this level and shoot back up because when resistance is broken, it turns to support. What does price do? No. It dips below that level right here before it turns to support. This is a common institutional move. It looks like this. Draw it above y'all so I can get a diagram.
So is that a stop hunt?
Exactly.
Okay.
You will see your clear retail level right here of support resistance. You will see price raise stops on the upside. Then retailers expecting price to line shoot back up, but no, it'll raise stops on the downside first, then shoot up. Now the retailers are like, I don't know what's going on. No matter what I do, I get stopped out. This is why the forex market's manipulated. That's all that was. Call it that's in retail terms that is a stop hunt. Now, where are you looking for your entries? At the stop hunts. Now, I don't know if we're going to find an exact entry because I haven't looked at this yet, but let's see if we can find one. All right, so actually before all this happens, I see that price has broken through. So I know that retailers are expecting price to come to this level, treat it as a buy, and shoot up. I also know that this is going to be a manipulated move. So you're going to see the banks slam price down below it before it shoots up. So what am I doing? I'm going to lower time frames and I'm going to anticipate an entry somewhere down here in this level. I'm anticipating an entry below that structural break. This is where I'm going to be looking for price to accumulate using Wyckoff schematics. I'm looking for an outcome candle. I'm looking for something. All right. And this takes patience because until I see that clear setup, I'm not taking it. And I'm not viewing
What time frame are you marking up on?
For the most part, my higher time frame is the 4 hour, my middle is the 1 hour, and my lower one is 30 minute. That's just what I usually do. But depending on what type of trader you are, that can vary. Some people like use the monthly, weekly, daily. Some people like use 30 minute or the 1 hour, 30 minute, 5 minute. It just depends on what type of trader you are.
And you a day trader?
I'm an intraday trader, so I use 4 hour, 1 hour, 15 minute.
Okay. Another question. When the banks do the manipulation move, is there like a way to tell like a certain percentage of how much they will push that price under, or like using fib, or like there's no way to tell?
Oh, you can use fibs. We'll get that in a second. We don't use them a whole lot, but I can show y'all how to do that. Let me see.
Also, in answer to her question, you just have to pay attention to liquidity as well. Just look at where the retail traders would have placed their entries or their stop loss. That's usually where you're looking for entry, where they're getting stopped out. That's usually what you pay attention to. Once price starts approaching that area that it kind of was breaking out of, that's where you want to kind of look for your entry.
Exactly. And I actually do not see a clean entry on this example, but I mean, best believe it's in there. But another thing, if you miss a trade, whatever. Missing trades is better than getting stopped out. I feel like that's something that needs to be clarified because too many people get FOMO'd out and freak out. Just if you miss a trade, cool. No one cares, to be honest with you. But as far as predicting how far below price is going to dip, you can use fibs. Now, I usually don't. I just go off price action, but I can show you how to do that. So let's just exit out of this replay mode. All right. So you have your zone of liquidity right here, this key level that turns to support. Predicting exactly where price is going to go down, you can take the fib and go from swing low to swing high. And it'll hit right in that fib area, that 0.62, between that 0.7, 0.79, somewhere in that area. That's how you would anticipate that. You see it went right in between that 0.62 and 0.7. Now, do I do that? No. I feel like it's excessive. I just go off price action. But when I see price accumulating on that lower time frame, that's when I'm looking for entry. So what does that mean? Come in here.
That was dope. How did you decide which one was a swing low?
How do you decide which was swing low? I got you. All right. A swing low. This is basic stuff. The swing low is just going to be that down surrounded by two ups, essentially. Now, what you can do is you can start from the lowest low and go to the highest high, in which this is the area you can predict price to come down in the future. But I go from the nearest low to the nearest high. So near low right here, near high right there. Use the wicks. Price came down at level and shot up. And you can actually use it to find re-entries as well. Do I do that? Not so much. But that's an option. I think you can see it right here too. Swing low, swing high. Yep, price came right down, hit that level, shot up. That's how you can catch some pretty nice re-entries. So I just go with the basic confluences, but that is an option for confirmation. Does that make sense?
Yes, sir.
All right, keep it up.
Yeah, very much so. Thank you.
Yeah, no problem. So, Kenna, you got anything?
Oh, can you use that? Like, what do you suggest as far as if you're doing intraday trading? Like, which one will you use the fib on? Like the 15 minutes to find like a re-entry?
Always the higher time frame. No matter what you do, that higher time frame is crucial. This is the daily time frame. I would use a daily. So let's just actually go back. Let's use a replay. I'm using that daily, taking the swing low, swing high with the fib. And really that lower time frame is just going to be confirmation. You're looking for entries around that fib. Where did it go? Yeah, you're anticipating price to begin accumulating right here in this area. That's just how you get these entries.
I have a question. So could you do a quick look at AUD/USD, because I'm honestly a little thrown off as to what it's been doing. Now I know AUD/USD is very heavily correlated with gold, and gold has kind of been on like a little bit of like a sell for the past couple of days.
And what pair?
AUD/USD.
Oh, AUDs. Okay. Never heard of this. I'll tell you that's cool.
I'm sorry. This is my little terminology. Like,
You're good. So let's see what we got going on. I mean, yeah, it's just an uptrend. Worker
So you
price
think it's
market.
going to continue in an uptrend?
I don't see any reason it wouldn't.
Okay, cool. No, I kind of am in a lot of group chats and stuff like that, and I don't necessarily always take the trades, but I kind of look at like different people's perspective on the market and their bias, and I like to pay attention to how different traders like approach the market and stuff like that, and I like to listen to what the majority of traders is saying. So I just wanted that confirmation that it was going to continue upward.
Well, at the end of the day, I mean, to be blunt, ignore what other traders are saying. Just have your analysis and stick to it. Like, I know we have a signals chat that we post signals. If those signals do not align with my individual trading plan, I don't take them. So
Yeah.
have your plan. If it doesn't abide by your plan, don't take it. And like most you in the chart, this is another example. You see what we have. Equal highs right here. It got broken. We're expecting price to revisit that, dip it up to all the retailers, and shoot back up. And what do you see right below it? The outcome candle. So you could get a temporary reversal, but overall look is going to be shooting up.
Okay, thank you.
What other questions y'all got? All right, let's dive into a bit of psychology stuff. So, New Year. Please don't go around saying New Year to me. That's just cringing. I'm sorry. Please don't. Penny for your thoughts. So you got to realize that as a trader and really just as a human, everyone is naturally ambitious. Everybody has something that they want to accomplish. They want to do. I think we were having a conversation about this last night in one of my group chats. Nobody truly realizes, because we're all naturally so self-centered, nobody truly takes into account that we're not that different from everybody else. Everybody else wants to be the best trader. Everybody else wants to make money off Forex. Everybody wants to do so many things. But why is so many people actually accomplish these things? So many people accomplish them because they don't have the actual plans to get there. Remember, a goal is not a goal unless you have plans to get there. Now, some of y'all might be saying, but Kylan, I want to be a better trader. What are the steps to get there? If it's hard to create steps to get there, you have to force yourself to create steps to get there. Because if you don't have a step-by-step plan to get where you want to be, it's just a plan. I mean, it's just your imagination. You got to know how to get there. So that's my psychology rant for today. Have a plan. Have a plan. Step by step. Here's where I am. Here's where I want to be. Here's the path to get there. Have that plan. Now, speaking of Forex, best thing to do to get better Forex or get more money out of Forex is to fund your account. Best way to fund your account, Outcome Reach and Vault are partnered with a company called, or a course called Side Money University. It is a course in which you take market research surveys to get quick money. I've been doing this for a year. Well, I started not even a year. I started last February in 2020, and I've made over $6,000 doing that. This is my biggest month in which I've made over $1,300 just this month. I've never made anything like that before, and I haven't even factored in my overall profits from this course. It costs $200 to get in, but I mean, if you put the time and effort in, you're going to get that back in a month. So that's something. If you are interested in it, send any Vault admin a message. Let us know, hey, I'm interested. We'll get y'all in. It's usually $300, but since you know us Vault admins, we'll get you in for $200. So just hit any one of us up, and we will get y'all in. So
What's the name of it?
Side Money University or SMU.
Okay, cool.
Just hit any admin up, and we'll get y'all in. No biggie.
Thank you.
Yeah, for sure. Y'all got any more questions for this course? Oh, for those of y'all on YouTube, drop it in the, just drop your names in the chat. We'll get back to you about it if you're interested.
I do have a question.
Go ahead.
So as far as smart money goes, one thing that I will say that I'm still working on is deciphering the impulse candle and the outcome candle. Being able to identify those two, I have a hard time with that. So could you like show another example or two of that?
Yeah. Find one right quick. Okay, this is a very short term one, but it works for last. All right. So your impulse candle is not a candle, it's a move. The impulse move is simply the move that breaks liquidity. The outcome candle is going to be the engulfed candle before that move. So looking right here, you see this giant purple candle right here that shot down?
Yeah.
This candle, you see these equal lows before it. This candle stopped out all the stop losses that were below these equal lows, correct?
Yeah.
That's your impulse move. Right before their impulse move, you see this engulfed candle, this white one. That is your outcome candle.
Right.
That's how you do it.
Okay.
That was a very short-term
Oh,
trade.
okay.
So it works. See another example right here before it. You see these, it doesn't have to just be one candle. Your impulse move can be lots of candles.
Multiple
This example
candles.
right here. You see your equal lows right here, these wicks. You see these candles that broke below it. That's your impulse move. And right before that impulse move, you see this engulfs candle, that outcome candle. What did price do? Hit it, shot down. Make sense?
Yes.
That easy.
Okay. Thank you.
No problem. Any more questions about trading or psychology or anything?
Can you go over identifying order blocks?
Yeah, that's everything we just did.
Oh, my bad.
No, you could. Yeah, just liquidity, impulse move, outcome candle. That's everything we just did.
Oh, that's it only, and that's it?
Yeah, that's it. It's easy.
Okay, cool. I thought it was like more. Okay, cool.
No. Now, as you progress, there are other things that you can do to find more entries. As you progress through the Outcome Reach course, which we have launched, if you were trying to get into the course, we have it. Let us know. We'll get you in. You will see other things like Wyckoff schematics. You'll see the Asian range, time zones, all this stuff. These other itty-bitty specific things that can really make your trades more precise. That's more advanced stuff. This is a basics call. So once you buy the course, you'll get all the information. Now, the course has been remade, as those in the private group know. We put our course on this original website. The website was awful. It was buggy. So we moved our course back to Teachable. So once that's finished, we're going to relaunch it once again. Y'all hit us up for this course information. If y'all thought this was valuable, this was barely even on the surface. We get so in depth. If there's y'all who like, ooh, I don't know if I have the funds to buy that course, SMU, Side Money University, hit an admin up. That's easy money that you can be making that you can put toward a course. That's what I did. I got Side Money University, then I got the Outcome Reach course, and then I went on to become an educator. All you got to do. Any final questions?
No, I'm all right. Thank you, man.
On a Side Money University, how exactly do you make money? Is it like through surveys or is it?
Yeah. So Side Money University is going to be, it talks about market research. Market research are just basically companies. I'll give you an example, Coca-Cola. Say Coca-Cola wants to develop a new drink. Before they do that, they will reach out to a group of people and ask them about their favorite drinks and such. And you'll maybe spend like an hour on a Zoom call, answering basic questions, and they'll give you $200 for that. Tonight I have an hour call, I'm getting paid $150 for that. About Colgate toothpaste. It's stuff like that. Sometimes it might be an online board. Like I actually got one yesterday. $300 for a month long. That's actually a very long one. But $300 for a month long survey. Every week they send me about 5 or 10 questions to answer. Submit those in. End of it, I get $300 in PayPal or check, depending on whatever I want. That's how you do it. It's super easy. Easiest money
Oh
ever.
yeah. Okay. Yeah, I do that. I do that in Jersey. That's why I was asking. Like, all right, I got you.
Yeah. Easiest money ever made. We'll teach you how to do that. So any more questions? All right. Well, with that said, I hope you have a blessed day. Hit any admin if you want information about Side Money, if you want information about the course. Ask your questions in the group chat, send charts. We're here to help y'all. Those of y'all on YouTube, hit us up if you want any information. Like and subscribe. Drop your question in the comment section. We will get to y'all as soon as possible. I'll see y'all next time.
See ya.